After the next bull run, what do you think will be the best point of action in terms of cashing out your gains? Uh, so, real estate, savings, etc. Good question. Good question. So, I think the strategy for a bull run is really to follow a value investor strategy. So, as we mentioned in the last live stream, a good value investor, a textbook value investor, buys from pessimists and sells to optimists. This is mentioned in the book, the Intelligent Investor by Benjamin Graham. It's a classic book. I'm going through the book right now, but it's basically you buy low, you sell high. And now that sounds easy. It's easy to say, but it's hard to do because that means you really are buying when there's blood in the streets. You're buying in a bear market when everybody's hopping off the ship. You're the last person on the ship, the last person on the boat buying, right? So it means you have to be contrarian by nature. You have to do the opposite of what people are doing. What does that look like? That means you have to do the opposite of what everybody on Twitter is doing. If you're doing what everybody in crypto Twitter is doing, you're not going against the grain. I mean, you're going with the herd. So you have to be somebody who goes against the herd. So you buy when there's blood in the streets. You buy when all of CoinMarketCap and all the exchanges are just red. It's bloodshed. And then that means you take profits, right? So you buy the dip when people are selling, when people are forced to sell based on liquidations, when people are wrecked, you're buying from wrecked people and you're selling to moon boys, right? So selling to moon boys means you're selling when it's green, when it's to the moon and beyond, when it's kumbaya, when people think that, oh man, Ripple is going to $10, right? So that's when you sell. Now, you don't sell everything, you sell gradually. So you have to have a take profit system. So this is different from everybody. There's no ideal way of doing this, but I would say at minimum, you take out your initial investment, right? At minimum. So that way you guarantee no L's. What does that mean? That means, okay, let's use Ripple as an example. If you buy Ripple now at 17 cents, right? And you say, okay, I'll hold Ripple for more than 1 year to have reduced capital gains, right? To have long-term capital gains. So after 1 year, let's say we're in a bull market, Ripple's is at $1.70. What do you do, right? For me personally, right, I would take out my initial at minimum, then probably take out some more. If it's up 10x, I would probably take out like 3x of that, right? So let's say I put in $1,000 into Ripple. From 17 cents it goes to $1.70. I basically turned 1 grand to 10 grand. I would take off 3 grand, right? So that's 3x return already. Put that into my savings, right? Probably put that into DAI's stablecoin lending, part of it in the bank. Maybe put some into whatever. Then the rest is house money. And that house money, how do you handle it? As it's going up, you sell some more, right? I would never sell everything, but let's say every 3x, you sell you sell 1/3, right? So that could be a strategy, right? So meaning if it goes from 170 to then what's 3x of that? Let's say, hold on, just give me 1 second here. 170 times 3 is 510. Then you sell 1/3 of that. Then from 510, it goes up 3x again. It goes to $15, $15.30. You sell 1/3 of that. So that could be one strategy. Or you could have maybe you sell a quarter every 2x. So I would say at minimum, secure your initial investment and then have a strategy to sell a fraction of the future gains as they go up at a particular interval. It could be just maybe every 1x you sell half, for example, right? But whatever you do, stick to that system and make sure it's a system that works for you because everybody's different, right? You could also just have a system where you take profits based on the need. So maybe you're going to, I don't know, pay off some bills. But I would say if you have bills to pay, you should probably not be speculating it right? with altcoins. But I would say maybe you want to go on a vacation. that's probably a better example. So maybe your vacation is going to cost you, I don't know, $4,000. So you sell $4,000 worth of Ripple to fund your vacation. So find different ways to make it work, whether it's with something tangible or whether it's on a particular system. But whatever you do, stick to it. But just make sure at minimum, you always recoup your initial investment. Now, when it comes to investing in other things, right? Let's say you put in more than $1,000. Let's say you put in 10,000 into Ripple and did a 10x, right? So you have 100,000, and let's say you want to cash everything out. What do you do? I mean, I would say definitely diversify outside of crypto. So I've been looking a lot into gold, for example. I've not bought gold yet, but it's something I'm just kind of educating myself more on. And from a crypto perspective, our team is going to be looking into Paxos Gold. It's on the list of projects we want to add to Token Metrics. So Paxos Gold is a New York regulated gold-backed cryptocurrency, meaning that it's a way, as opposed to buying physical gold, you just buy the cryptocurrency and you can exchange that for actual gold. So I think that's pretty cool. So that has definitely caught my attention. Paxos is a pretty reputable company in the crypto space, and the fact that it's regulated is good. So that has my attention. So let's say you put some into precious metals, put some maybe back into the stock market, maybe through an index fund, or maybe you're investing on your own through a mutual fund. But real estate as well is also a good way to diversify. But I would say definitely diversify across different asset classes, because you never know what could happen, right? I definitely can't advise you on how to do all of that, but definitely through the research, look into it. Have lots of ways to do it, right? So for me personally, things I've been looking at, I've mentioned before, stablecoin lending through DICE, through Celsius, where you could possibly earn 7% on your cryptocurrency, right? So if you put, let's say I have 100,000, I could take 10,000, put that into my bank account, right? Maybe just a regular savings account that's FDIC insured. Then maybe take 10,000 again, put that into DAI on Celsius. That's insured as well, and that gives me 7% annually. Then maybe I get 10 more grand and put that into DAI on DeFi on Newell, right? So spreading the risk across different platforms. And then other platforms I've looked more into. Now, these platforms are not really for everybody. These platforms are more for professional investors, right? So maybe if you're a qualified investor, basically rich, you could start investing on platforms like AngelList, right? AngelList lets you get early stage equity in different companies, but that's a lot more risky, and it's definitely not for everybody. So I cannot recommend that to everybody because it's different. If you want to maybe just diversify in the stock market without having to think much about it, the platforms that apply to everybody, platforms like Wealthfront, Betterment, they're basically robo-advisors. They keep things very simple. We're kind of working towards building something like that for Token Metrics, but that's way down the line in the future. But I think it's definitely something that can be used to invest in the stock market. There are platforms out there that let you also invest in real estate through platforms. I haven't used any, but I do know some friends that do use them, where you basically kind of pull your funds together and you invest and buy commercial real estate, and then you basically get a monthly rental income coming in. I'm not sure if you get the income coming in if the property is sold, but one platform I did join a while back, but I still haven't used it, but it has been on my radar. It's called Yield Street. Now, this is for professional investors, right? For qualified investors, you have to have, I think, net worth of $1 million or more. But this one is definitely worth looking into if you fit that income level bracket. So it's kind of like, yeah, it's basically that. So they have lots of what they call alternative investments that allow you to go through and invest. So let me see what kind of, you can invest in real estate on the platform. You can invest in marine and art and lots of different asset classes. This is more for well, I wouldn't say institutional investors, but I would say high net worth investors. So if you fit that bracket, definitely check out a platform like this. I don't have any affiliation with them. I just have an account, and I've seen the kinds of offerings they have on here, and I think it's pretty cool. They recently did a deal with with some big banks. I think Blackstone was one. I think some other as well. So if we go through here and see how it works, so they have an app, right? And the app, you add funding, and they'll have deals. It's kind of like IEOs or ICOs but for actual assets, right? Actual securities sometimes. So they'll have private investments. So it's kind of like private equity. So they'll say, we have this commercial real estate deal, and we want to buy this building for, let's say, $10 million. And all we have to do is just put up the first 2.5 million. So you have all these high net worth individuals that pull the funds together. They have some of the company will manage the property the day to day, and all you do is just collect a check. So this is almost kind of like fixed income, but it's not quite fixed income. But platforms like that, I think, are definitely safer places to park your money after you've made some money in crypto, especially if you've made a killing in crypto. So that's kind of what I plan to do once the next bull market comes around. All right, so because I think that's something all of us could definitely have done better, because most of us, for the most part, were brand new to crypto. So once we got our gains, we thought the green days would not stop. We thought that we'll keep on going to the moon and beyond. But we also have to learn to plan for a pullback back to earth. And I think being able to find platforms like that. So obviously the platforms I mentioned are mainly for high net worth individuals, but there are other platforms out there for the average retail investor and trader. If they're not, then I would say just diversify in platforms like Wealthfront, Betterment, having some money in the market, not everything, but having some money in the market, some money in precious metals, some money in real estate. Maybe it means just buying your own duplex or triplex, right? Or just buying your own house and renting that out for rental income. Because one thing I kind of learned now is, I mean, cash is king. And once you've made money, you want to have assets that pay you to own. And that's something that we've kind of lost in crypto, because we were so used to the drastic gains. But you want to have assets that pay you to own, meaning fixed income assets. So assets like a house, so owning a house and renting that out and having rental income, or having that person pay off the mortgage. So that's why real estate is always good. Now, obviously, we're probably going to go into a recession, so prices will likely go down, making them cheaper to own, which is actually probably a good time if you're looking to get into real estate to start getting into that. Then maybe even just bonds, right? Bonds, for me, I don't do bonds, but to me, stablecoin lending on Celsius and DeFi platforms, in a way, is kind of like bonds. So there are lots of different ways to really preserve your wealth. So going back to your question, let me pull up the question here, because I have been talking for a while. Go back to your question, right? So after the next bull run, that's really a strategy I would implore to use. Let me know what you guys think. If you have different strategies, please share in the comments below.